Welcome to the pre-market analysis of Nifty 50 for 10th of January 2025. Positive energy. Now, today what happened is a very important thing to understand. Today we saw important movements, we saw stagnant movements, we saw a sideways market, we saw a very important line, very important support to get that challenge, that one we were waiting for so long, and we saw the idea of what is a range. Also, just for your confirmation, the FIIs are recklessly selling rupees. So, I mean, they are selling. So, that is not good news for our country, or not good news for our economy and financial markets. I'll tell you the relations, everything properly, do not worry. Now, coming back to Nifty 50, one needs to understand before starting the day itself, we had negative news. We got news from USA, we got news from India itself, we got news from global cues. It was not good for the economy because the global cues were very sideways to bearish. So it was not very handsome to come across around 9 a.m. and sit around thinking that market will give you something great. No, it won't. It did not, because of the cues available there priorly. Now, we'll come back to Nifty 50 specifically here because that is what decides the market. Everything else at times behaves as if they are just the contemporaries of Nifty 50, and Nifty 50 is the leading chart. So here we always talk about Nifty 50 to understand the paradigm of our economy. Here we go. Now, structure one. The structure one here will be about, I'll tell you, it will be about the movement of charts, the movement of candles, how the market started, how the market went through, and how it ended. Structure 3, the idea of smart money and how I am going to present you the idea of how smart money worked today. Third, executions, where and how you could have executed intraday trades, long term trades, or short term trades. Now, three structures, fasten your seatbelts. Here it is going to be the analysis pre market of Nifty 50 for 10th of January. Now, look here. We have a market clearly in front of us, Nifty 50 at time frame 15 minutes that we have talked about so many times for the last 3-4 days. I've been barking, like literally barking. Do not use any other time frame for intraday trading. We have 23,557 to be the closing point of Nifty 50. So it ended around 23,557. It basically dropped by 160 points roundish. So it was not really a good day for Nifty. But you see a lot of highways. What I mean by highways are like trends, short-term trends, but trends. Just look at it. We saw market to challenge the level of 23,000 today itself. We saw the level 23,500 to be challenged recklessly. We need to understand how it was challenged. First of all, look at it. 23,500, you see a line here. This is 23,500. It was challenged, like literally challenged. The market was sitting here for a quite long time. And we were thinking as if 23,500 will be broken properly. Now, it was basically all of us, we were thinking that it is going to be done. 23,500 is going to be done. It did not. Why it did not? Because the DIIs were extremely buyers. They tackled the FIIs. Initially, when I had discussed about how FIIs are net sellers, I will let you know how and why the DIIs, domestic institutional investors, were net buyers, and they tackled them well. Now, because if they did not have, then 23,500 would have been broken properly with a very good shape. Now look here, we have a very proper movement. Market started, let's just see where it started today. It started here, 9:15 candle. Let's just zoom it in, understand what happened here. The market started 9:15. Market started basically flat. It gave a very beautiful downside trend. Now understand one thing, okay? Yesterday 15-minute candle, there were like 1, 2, 3, 4, 5, 6 15-minute candles were here, which was basically 23,660. So this was our yesterday's resistance. If we make it very clear, 23,650. It was yesterday's support. Now immediately the first candle, which was the 15-minute candle, came. And it came out to be a banger. It broke 23,650. Now, for everyone who was going to think about puts, they executed puts. They thought it to be a very good opportunity, and they thought, okay, 23,650 is done. Now we will execute our put trades, we will buy, and we will give a very, very good weekend ahead to us. But that did not happen. I'll let you know why. Because you must have seen here, we are able to see a very proper downtrend. It is very much significant, visible. But when you trade in the market, there are confusions. There are dilemmas. Now, the dilemma here was basically just look around. Now, when the market broke this level, despite a continuation, market did not continue for a long time. We saw upside spikes like here 945, there was a spike, there was a hammer, people were very confused, and then again from the same support which later on became our resistance, it resisted from that place. Okay, 23,650 came out to be our resistance. Now market did not break that resistance, so significantly it is very much important for us to understand that this resistance is very, very important. Now what happened next? Market gave another downside trend. Market went down. It gave a very beautiful candle. It started basically around 23,618, a 15-minute candle, and ended right around 23,540. I mean, a 80 points candle. Damn. Anyway, just look around. 23,540, the candle ended, and then after it was basically a bearish to sideways market. One thing was very much challenged here. We had proper discussions about what should we do. Should we have trade here, or we should have left the day? Intraday traders, what should have been their ideas? What should have been their plans? Now the idea is to understand that here you should have not traded. You should have not traded because the range which was 23,500 was not broken. It was not done with. Our range continues. It sails. Now there is no second guessing that. Once you have a resistance, once you have a support of 23,500 was basically your support. Your resistance was 23,800. Later on to be 23,700. Now, this resistance and support came out to be your range. In this range, a buyer does not flicker. यहाँ पे जाकर के one should not double check their analysis. And we did not flicker. We did not buy. I did sell, but we did not buy in this market. Now what should be our tomorrow's idea? What should be done here? Because we are seeing significant support power here. 23,500 has been properly tested. The challenge is on. Now what should be done here? Understand, guys, just understand. 23,500 is our support. It can get a proper break tomorrow. If it gets that break tomorrow, we are going to see another challenging point, which is 23,300. We cannot think it to be a fair value gap, a complete fair value gap. But what we can see here is, let's look around, okay? 23,500 to be broken here. If it does, we can see 23,300 to be our another challenge. So you can have a trade. We can have a trade till 23,300, but there is another challenge. There is not going to be a 1,000-point gap down. There is not going to be a 1,000-point fair value gap. It is not going to be that. So for us, what should we do? We should adhere to our plan. The plan is to adhere and respect 23,500. If 23,500 is done with, we can trade below. We can take puts when there is a confirmation below 23,500, and we can take calls when there is a confirmation above 23,660. 23,660 is going to be our new resistance, and 23,500 is our old and same friend support. Now, tomorrow we need to understand one important thing here is that 4th of June is going to play a very important role. 4th of June, basically it was 24th of June, there was basically, I think, exit poll results was there. I am not sure. Was it the elections? I'm not really sure about it. But what happened that time? Our country saw 10 to 15% downside movement in Nifty, in Bank Nifty, and everything was so hazardous that people were so scared that it's going to be a downfall, a correction of the times that we were waiting for. No, it was not. It was not. 23,300 basically came out to be a very important line, because then market for the last time when it was around 23,300, it was around 4th of June. Market came down 10%, but it went 10% again in the next 3-4 days. The next upcoming 15 days, the market was basically twice up than the last month. So basically, market showed a movement of 15 to 20% within a span of 10 to 15 days. Guys, understand what I'm trying to say here. I'm trying to say here that there was basically a battlefield around 4th of June. Now, the battlefield is going to be tested now again. In this market, we were waiting for so long for 23,500 to be done with and then trade below, only because the last time the market was seen around that time was 4th of June 2024. Understand now. When the market comes around 23,500, wait for a 15-minute closure. Wait for a confirmation of 23,500. Below that, there should be a confirmation candle, and then only you enter there for your put buys. Now, what should a seller do here? In a market where there is volatility, in a market where there is a lot of volume, in a market which is not sideways, in a market which is out of the range, a seller should not involve themselves. The job of a seller is to basically stop the market, slow the market, take the advantage of the time, decay the premiums, and nothing else. Do not sell on highs, do not sell on lows. Do not do anything of it. Don't do this. For a seller, it should be a very alert period, just like buyers had for the last 4-5 months, that here you will not trade and just observe. One should just observe here. A seller I'm talking about. Now buyers, keep your seats belt fastened. It is your time that you were waiting for. It was basically 5-4 months. You were like so much into the market. You could not understand the October maths. You could not understand why and how happened in October. Oh my God, Nifty went from 23,600, 26,200 down to 23,000. How is it possible? It was possible. You were not very much alert there. You should be alert now because you are experienced now. In the last 3 months, Nifty is going to give you another opportunity. If it breaks 23,500 with a confirmation, then there is going to be another challenge which is going to be around 23,300, and then it is going to be hallelujah. Understand? Now, the resistance is going to be very, very particular, 23,660, and then after 23,800. 23,660 and 23,800. Idea is the FIIs are net sellers, not good for the economy, not good for the market here, but the DIIs are tackling them well. The market can go either ways. We cannot predict the market. The budget is going to come. We need to understand our repo rates, our RBI policy repo rates are going to come in February. Our budget is going to come. Financial budget, 1st of February. GDP growth, GDP rate, GDP prediction is going to come in the next 2 months. Understand this is going to change the whole hulia of the market. In upside or downside, we have no idea. One should sit here, enjoy, observe, and be patient.